Welcome to the future of money. Come with us on this journey into the world of Bitcoin, blockchain and crypto projects. You're going to meet the trailblazers. These people have changed my life and they may very well do the same for you.
Give the people what they want, Benzan, and have a look at what's happening in the world of Bitcoin's price. I hope this isn't too loud, or we get done for copyright infringement. I'm sitting under a speaker in a restaurant.
No, I think it's just soft enough, you know. It's just soft enough. That's fine. So what I'm going to do, okay, everyone wants to know what the price is doing, and the analysis is real simple. Can you see my screen and the Bitcoin chart?
Yes, I can, sir.
Okay, so this is the 4-hour Bitstamp chart. 4 hour meaning each candle is it represents 4 hours of price action, and this goes back to the end of June on the top left here, and that was a price peak just shy of 14,000. And then price has been sort of holding below that high ever since, and that's now 2 months, right? So going forward, we can see that the price action is contracting. And when I say contracting, is we're making lower highs and also making higher lows at the same time. So this is a sign of indecision in the market. You know, the market is spending time while it's waiting for direction, while it's waiting for some reason to take action. And it obviously hasn't reached it yet. So my analysis in these kind of situations is real simple. We can see in the green trend lines that we're in a contracting pattern of price action, but also from the magenta lines above and below price. I would expect that we can assume a direction in price once the market establishes price above this magenta trend line, and that's around 12,000, or it drops below this price level, which is approximately 9,000.
Right.
And right now we're at the sort of the lower 10,000s, and there's actually a line that runs through 10,100 that's affectionately been called the Tyler Jenks line, because Tyler said there is a pivot point around 10,100, and we can see actually that this is the price around, this is the level around which price is oscillating. So while it's oscillating, we just leave it to oscillate. No reason to choose a direction.
Right.
Yeah, and I'd say it's time to trade once price breaks out of these purple trend lines, the lower one at 9,000, the upper one at 12,000. If we break above 12,000, there's a lot of upside until we get to the double top sort of level near 20,000.
Yeah.
The downside is more dangerous, because the downside, there's strong resistance at 8,000. You can see even in the left of the chart there, you're starting to see some previous sort of contention in the chart here at 8,000. So the short trade is much more risky than the long trade. I would potentially just take the short from 9,000 to 8,000 and then expect price to find support at 8,000 and perhaps move higher. That remains to be seen, but that's the expectation at this time. I'd be far more keen on upside. How about you?
Right. So what I'm hearing is you wouldn't really be making a move here until we're hitting like either of those purple lines.
Yeah, I would just
so this is a bit of a no-trade zone.
It's a bit of a no trade zone, and the best kind of advice for anyone that's not adept at physical at technical analysis or physically taking on risky trades at this point is just remain out. Let the market do the hard work and show us which way it wants to go. And for however long it's going to take to reach that point, we wait for that.
All right. Well, given the fact that we're sort of playing around in that no trade zone, I think we can move on to this analysis that I saw you, Tone, and Willie talking about recently, the mining difficulty ribbon. That's fascinated me. Could you shed a bit of light? I'm trying to wrap my head around it. I think I understand it, but it'd be great if you could give us more of an insight into into that analysis?
For sure. I've not actually heard Willie recently speak about this, and I was on a show with Willie, and when he was speaking about it, but I was kind of distracted at that time.
I think it was actually
price action and stuff.
Yeah, I think it was a guy called Vinnie Lingham from Civic who first noticed it back about 2015, I think. But Willie had a chat about it recently. I find it quite fascinating. It looks like there might be something to it.
Right. So what we're seeing on the chart, can you and the viewers see the chart I'm sharing?
Yep. Can do.
Okay. So this is Willie's chart, and that he shares on his website, woobull.com. And we see the price action from the beginning of Bitcoin in the left of the chart. That's when Mt. Gox first started trading Bitcoin for US dollars. And there's the price action going up in 5 waves, the Bitcoin price going up to the high, up there near 20,000. And this is where we are right now. The red sort of collection of lines, and they are moving averages of the Bitcoin's difficulty, of its protocol difficulty. It's a collection of moving averages that form this ribbon, because you can see it sort of fan out, and then they contract, and then they fan out, and they contract and fan out again. At the moment, we're at a point where the difficulty moving averages had contracted, they compressed, and that they're now fanning out. If I'm going to have to, I'm not used to manipulating Willie's charts. I'm going to try this. This should give us a sort of indication. Let me try that. There we go. The 2016 and 2017 rallies are here. You can see there's some compression of the moving averages there. The moving averages being averages of the average difficulty. They did the average difficulty of the protocol, and the quicker that the miners find blocks, the more the difficulty ramps up, because Bitcoin is the protocol is trying to sort of regulate how often miners can find a block. It should be on average every 10 minutes. So the difficulty changes as the more and more miners come online, and so it's a cycle. It's a sort of a dynamic thing. It changes over time.
Yep.
And it's not pre-programmed, to put it like that. So we find that when the averages of difficulty compress, they will eventually decompress, and we see a rally during that period.
Yep.
Then as the bear market sets in, they compress again, and now we are seeing an expansion of a decompression of those moving averages, which one can interpret in different ways. One way of interpreting it is that if we're looking at this kind of phenomenon where there's compression and then decompression, and price is going up, then surely that's what we're looking at now, that they're doing compression, they decompressing to the upside, and now we'll expect higher prices going forward. However,
so basically where they compressed, that was sort of the start of the this bull run we've had, right?
That's it. And we see a previous example in the left of the chart. So a very simplistic analysis, a very naive analysis would be, well, we're looking at the same correlation between difficulty and price, therefore price will go higher next. Yet I would not make a buying decision based on that, because of the fact that we don't know the extent of this bear market. My personal opinion is that it's going to last much longer than most people expect, and that this is
whoa, Benzan, what are you saying here? We're in a bear market?
I'm saying that we're in a bear market, not only for last year, but for that we're currently in a bull trap, and that we'll see some more declining prices.
Oh my goodness, really?
Oh, I know. Sorry to deliver the bad news. Well, this is in fact an opinion that I've been giving for the past.
Yes, I know. Yep. You did call this. You were one of the very few that actually called this big rise up that we've had. I don't think I saw too many other analysts calling that. You called it, but at the time you also did call a bull trap. So I guess you're saying, I mean, what are you saying right now? When would this bull trap maybe kick in your opinion?
I'm saying our, treason on the high seas of Bitcoin price action. That's what I'm saying. Like, be cautious. For somebody to invest heavily in Bitcoin now doesn't make sense just based on this difficulty ribbon, because as we saw in the analysis I just presented, we don't know the direction yet. On a smaller time frame, this Willie's chart's in a daily time frame. On a smaller time frame, in the 4 hour, it's showing us there is no direction.
Okay.
So it's a time for just sitting out and being cautious.
Well, I'm listening to you, man, because you've nailed it this year. I've actually spoke to a couple of guys this week who have been super impressed with how accurate you've been. You know them. We'll talk offline about that. But let me just change the view here. Yeah, so Vinzen, big calls. The other thing I really wanted to try and get some help from you on is we're not far away from the halving. When is it? May next year?
May 2020.
Yeah.
Projected because the halving is one of those things in the protocol that sort of gets regulated dynamically as well. Yeah. On average, it should be around 4 years. And then the block reward halves, for those people who are new to this kind of thing, nothing else in the protocol changes. The only thing that changes is that from a certain moment, and we see a countdown to it in the protocol, from a particular moment, every block only rewards miners half of what it did during the previous cycle. So where we're at the moment, we're at 12.5 Bitcoins block reward per block, right?
Either way, the miners are losing half their reward. They're losing half. So basically, as a business, if I'm a miner, I'm going, okay, half my reward is disappearing next year. Now, Vinzen, I'm super confused here. Maybe you can help me. Why do people talk about the price of not just Bitcoin, but these other cryptocurrencies going up, coming into a halving? What's the rationale?
The rationale is that there's part of it is historical precedent. We look at the chart and we say in the past, the price had sort of rallied into a halving event. A few months before it would start rising into the halving, and then as the halving came up, suddenly there was a sell-off because people would take profit on that wave of speculation, right? So in the past, Bitcoin had, on each halving event, price had rallied into the halving event, sold off just before it, speculative profit taking, and then continued rallying. So everyone is saying, with the 2020 halving coming up, we can expect price to rally into it and then continue rallying after, once it's corrected a little bit. And this is based on historical precedent. I would say that there is another aspect to it, in that thinking from the miner's point of view, some miners, there's sort of speculation about what miners do, but one would imagine that if you're a profitable miner and there's a halving event coming up, just as you said before, your prospect is that, well, my income is gonna halve. I'm just gonna receive half the amount of Bitcoins after this date. Every block I find, I will only be rewarded half the amount that I'm currently receiving. So the miner has to make sort of structural and budget changes to their business. And the conventional thinking is that in order for those miners to remain profitable and for the network to remain secure with plenty of healthy miners on board, the price of Bitcoin must double to compensate for the it must double in fiat value, US dollar value, in order to compensate the miners for now only receiving half. So this is a sort of a conventional thought about it. I don't know if that's always going to be true.
Or there has to be...
Does that make sense so far?
Yeah, well, I mean, there's many things that affect the price of Bitcoin, obviously. This is something that's really starting to sort of concern me about Bitcoin, because obviously I think, with regards to Bitcoin, you've got there's an economic model you can look at, there's a political model, there's a social model, technical. Understanding the space is super difficult, and I think anybody who is investing in this space has to understand the issue around block size. For me, it was the catalyst to actually launch a media brand here. It just fascinated me when the drama began, and I suppose it began sort of late 2016, but really came to a head in August of 2017 when we had the coin split to BCH, and obviously a recent one to BSV. I've invested a lot of time and money and recently flying out to Canada to understand what this BSV camp are doing. I think the next year in this space is going to be absolutely fascinating. The reason I say that is, I've got a pretty good understanding of the history behind this, the block size debate, and obviously would like to help educate people on that. I think it's so important. I think between the two of us and the guests we're going to have on, I'd strongly encourage people to follow this content. We are going to get some of the really big names on to help during this process. But, I don't have all the answers, and it's a really difficult one to wrap your head around in many respects, and hence asking you why, the price sort of goes up coming into the halving. For me, if I'm a miner, surely you're going, well, right, I'm going to lose half the Bitcoin that I'm rewarded for using my resources to secure this blockchain. Obviously, I would have thought the model was really looking at the fact that transactions would increase, therefore there would be fees for these miners. Now, obviously, the problem that I see Bitcoin having is we still have this small block size. The actual use of Bitcoin for day-to-day transactions, hence rewarding miners with fees, it's just not really there. Is this a problem for you?
The block size debate is something that I've got really strong opinion about, and what I'm I guess at the outset, let me say, because you mentioned a lot of things there.
Yes,
let me just say as a first point. No, it's good. It's good because we're going to cover all of this, and if whatever we don't cover now, we're going to get into more depth in the future shows with some of the actual players and hear their thoughts. My personal conviction, it's not something I'm hoping or wondering about. My personal conviction is that price of any market, including Bitcoin, is not moved by fundamentals or by news, but by an invisible force, which is the collective subconscious of that market. And for this reason, in conventional thinking, there are a lot of misconceptions and misattributions, because we as humans want to find effects for causes. So if we observe the cause that price is rallying or the price has gone up, we're like, what? We see the effect. What we want to find the cause. Why did it go up? And we look around us and we find the most sort of impressive piece of news and say, this is what made it go up. But if we really study this over the long term, and there are organizations who have done this and there are research papers, we find that the quality of the news is not really what causes the price action. It is the weight of buyers to sellers. And what's good news one day will be bad news the next day. And when the market actually wants to advance price, when there is buying behavior, it is being caused by a positive social mood in the collection of all traders, and it will advance price irrespective of the news or fundamental changes. So I do not believe that a fundamental change, like a change to the protocol, whether it be how much the reward is per block or what the block size is and what that fundamental change hopes for, I don't think that that is in the long run going to change the course of the market. So that's the first thing. And in this sense, I'm an Elliott wave principle guy. I believe that there is a principle in price movement of all markets, and a man called Ralph Elliott proposed it in the 1940s, 1930s already. From his study of markets and Fibonacci ratios and buying and selling behavior in the market. So that's a different issue, and that's something I cover in that we've discussed and that I cover in my workshops that we'll mention or link in the description. With that said, the block size debate is very interesting because it started probably around the time I got into Bitcoin in 2013. It was already bubbling up, but it started really gaining momentum in 2015, and it became an issue in the developers talk and in those personalities who were most interested in Bitcoin. You know, the Bitcoin core developers, people like Roger Ver, who wasn't a core developer, but who was heavily invested in Bitcoin. Guys like Trace Mayer, who'd been early adopters and had an opinion.
Eric Lombroso,
there was
Alex,
Eric Lombroso, core developer, Gregory Maxwell, Adam Back, one of the people cited in the white paper. Yes. So this became an issue. At that time, one of the big proponents was Gavin Andreessen, who was a core developer at the time and has since been sort of shamed and had to quit. Mike Hearn was another proponent. So the issue really became public in 2016, and it was a cause for great concern because now there was disagreement. Two camps were developing. One side saying, we've got to increase block size for all these reasons, and you and I will list those reasons and get into it. And on the other side, they were the sort of the conservative core developers who said, hold on, everybody. We need to, if we're going to change anything in the protocol, it needs to be done in baby steps. It's got to have good scientific reason, and we've got to create simulation, and we've got to have precedents for making such changes. And they wanted to keep Bitcoin block size small, where it was at 1 megabyte, where Satoshi Nakamoto put it last. So these are the two camps that were developing. In 2016, it became a fear factor, and we see the price was rallying into because of that fear, or despite that fear. The network became congested, as it does during every rally. And this was sort of confusing the matter because now the big blockers, as they became known, the big block advocates were saying, you see, Bitcoin is too congested now. Now people can't get their transactions through. The speeds are skyrocketing. If we increase block size, it's going to alleviate all of that, right? And this is where it gets interesting because that is not necessarily true, but it is an argument that some people intuitively jump to. And I've got some counter arguments to that, but what are you thinking at the moment?
Oh man, look, it's just such a fascinating area, and this is why I'm, after the doldrums of 2018, things are certainly getting extremely exciting in Bitcoin again. Obviously it was a Bitcoin site that it was sort of devoid of things to sort of write and discuss about in many respects last year. That is about to change massively, in my opinion, and it is right now. The reason I say that is, if you go back to 2016, before, a lot of people sort of feeling new here would maybe know Roger Ver as, a guy who's really sort of losing his shit, so to speak, on a lot of the content. But back in back in 2016, he was actually very a hell of a lot more calm and measured. If you look at a lot of the conversations that were taking place with the core devs and himself, he wasn't really he was on the fence on Segwit, and we'll explain what that is to people. But then I think it's also important to maybe go back a step and people new to the space. Bitcoin was certainly not always been a 1 megabyte block. It wasn't. It's always slowly increased in size. When obviously we got to a megabit and there were issues, whether you call it spam, what is spam to one person, maybe was transactions to others. I got some thoughts around that.
Transaction to another, yeah.
Well, maybe I don't want to sort of do what I often do and jump off on different subjects, but yeah, needless to say, the block size there was an issue. I think it's also good to be fairly clear that most people agreed around that time. Yeah, we need bigger blocks. To me, the big problem was how do we do that? And obviously we've ended up with a coin split, and that really, to my mind, happened because the core devs there just wasn't agreement on how this hard fork could take place. There's obviously a huge amount of issues around doing this. You've got to get everyone agreeing. It's a very complex matter. So what fascinates me right now is this Bitcoin SV camp have effectively had a hard fork a few weeks back to a 2 gig block, and as of February they're completely removing the block size. So this is the experiment that everyone was, I suppose you could say, didn't feel the timing was right in 270. It's about to happen. Well, it has kind of already happened at SV. So for me, it's fascinating to understand how they're doing this. The core devs were saying from a security point of view, it just wasn't possible back in 217. And I think we need to get some of these some of these players on the show with us over the next few weeks. I know a few of them, so do you. So really, I think our job at the moment is to maybe cover the basics here and then bring in some real subject matter experts.
That'll be great. Yeah. Can we explore some of the issues? I mean, just historically, what was happening in 2015 is Andreessen and Hearn and some of their buddies said, well, if you core devs don't want to change the block size, then we're going to make a fork of Bitcoin and we're going to do that ourselves. And it was called Bitcoin XP, proposed by Andreessen and friends.
Sorry, XT, did you say?
Oh, XT. Did I say XP?
Yeah.
Yeah, I was thinking of Windows XP, which is a similar sort of...
yeah, that was Jameson Lopp, I think, was involved there as well, wasn't he?
Yeah. So then that was shortly... in the coming, within a year, there was a Bitcoin AB from ABC, was it, or AB?
Well, there was Bitcoin Unlimited.
Yeah, and that's right, and Bitcoin Classic. There were all these proposals coming out. We're going to fork and we're going to increase the block size.
Yeah.
Core, in the meantime, said we're not going to increase.
Were they implementations though that the various devs were looking at? I mean, there wasn't. I don't think there was.
These were cargo cults, in effect. I mean, there was no scientific reason. These were just people saying, when the blocks get congested, like this was a famous saying that everyone mocks Gavin Andreessen for. He was saying, when blocks get full, bad things happen. And it's kind of like, well, can you illustrate this? What are you talking about? Give us a case example. Show us an experiment. It was just people saying, I believe that we should go this way of bigger blocks, and they had certain explanations. Before we get into those explanations, there was just a proliferation of different personalities there, and Dreesen and other guys suddenly saying, we're going to make our fork with big blocks. And meantime, the core developers were saying, guys, hold on, baby steps, right? Let's remember baby steps. Bitcoin is not a production software. It's a beta software. And, it's a version at that time, version 0.9 or whatever it was. It's not a version 1.0. It's not a production software. It's an ongoing experiment. But before we wreck people's money and the security of the network, let's take a methodical baby steps approach. And they were saying the way we can increase the transaction throughput is in fact not by increasing the block size, not working at that level of scaling, but by making Bitcoin a layered protocol. In other words, you say that this fixed block size Bitcoin is one layer, and then you put another layer on top and another layer on top. One of the layers that they were proposing is Lightning Network, which allows very rapid, almost infinite number of transactions per day with very low cost. To happen without requiring a block size increase. And that was the way they were looking. And in order to do that, in order to enable this layered kind of Bitcoin, some internal protocol changes needed to be made. And that is what then became the proposal of SegWit, segregated witness, to segregate the digital signatures to each transaction and each block into its own sort of database and not be stored in every block. And from there, then a lot of criticism of SegWit developed, that it was like whatever that was. Essentially, then we find that the two camps were proposing different things, having blocks remain the same with a layered approach on the core side, and on the big block advocate side, they were saying, let's increase the block size to increase the capacity of Bitcoin. Let's scale it like that in order to allow more transactions and to lessen fees. And these were the two main camps. And from there, then from this point, then we can look at the merits of each case. Before we do, what is the current sort of state? Do you know what the current state of the matter is? I believe Bitcoin Satoshi's vision, Bitcoin SV, which Craig Wright's sort of project is going to increase block size to unlimited next year.
Correct. Yeah. So, I mean, for people new here, and that's who we're sort of targeting with this content. Just a sort of recap of that. Excellent summation, Denzel. Obviously, there's three main Bitcoins, all sort of saying they are Bitcoin, all with their own sort of pros and cons in many ways. I sort of see, I mean, for me, this is really fascinating now. It's here we go. Next year, where the block cap's coming off. It's going to be incredibly interesting to see how successful this can be. We've got Bitcoin with it's
not coming off for Bitcoin. It's coming off for a fork of Bitcoin, right? It's coming off for Bitcoin SV, and
So we've got Bitcoin BTC, we've got BCH, we've got BSV. So
and BCH is Bitcoin Cash, which is Roger Vere's sort of personality code, and Bitcoin SV, which is Craig Wright's personality code.
Yeah.
In my view, right? I know you don't think like that, and I don't mean it as a criticism of you in general.
Look, my attitude, my attitude on this whole thing is to learn as much as I can, to meet as many of these people, and I've certainly done that over the last couple of years, and I'm going to continue to do that. I'm really sort of ramping that up. It's it's fantastic to be involved in a space where you do get access to the key players quite easily. And look, I think everyone has to be listened to. And for me, I'm not I don't say, hey, I'm a BSV guy or I'm a Bitcoin guy. I don't really feel I have enough knowledge to make an absolute firm decision. From an investment point of view, main thing I'm trying to do is understand, what are the merits of these different blockchains to the degree now that, I've had people approach me in the finance world. They're looking to put their products onto blockchain. So, it's my knowledge of the space is going through the roof at the moment. Obviously consulting with various companies to advise, it's something I have to do. And, I just think I'm concerned about the fact that Bitcoin isn't being used day to day, and what does that mean moving forward? Okay, you've got people like Saifedean who, I've heard him say, okay, he's pretty happy with where it's at now, and okay, is it just digital gold? Is it something that you're going to buy and sit on it, and price will keep going up in happy days? Then part of me is the guy who wants to see Bitcoin being used. The SV is saying, well, for a content creator like myself in the future, you'll be able to put content there and monetize it on that blockchain. That's pretty exciting for me. I want to understand it. Is that realistic? Is that possible? So for me, it's I think I learn something new every day, and I'm really trying to put myself in the position of consistently doing that by talking to and meeting these people involved in the various projects. So hence hence getting on a plane and flying to Toronto a couple of months ago and meeting all these people and meeting the engineers. And I got to say, I was impressed by the quality of a lot of the people involved in that project. And I think it's a little unfair to say it's a cult, a Craig Wright cult. He's one guy. Whether he's Satoshi or not, there's a lot of people involved there, and there's some real smart people involved. Bitcoin, same thing. The likes of some of the guys at Blockstream who have been lucky enough to get to know quite well, amazingly intelligent people. So,
can I quickly interject there?
Yeah.
Of course, like you, I consider myself incredibly smart. There's
I didn't say I was smart.
There's so many things. There's just so many things that I know so much about, right? But then every now and again, you get a shock when you realize that you're really an amateur or a dummy in something. I can say that to myself. For instance, with relationships and women. I had an incredible sort of pivot in my life when I discovered the red pill at the ripe age of 47. And
you're not talking about Viagra, are you, Benson?
No, I'm talking about the red pill philosophy of the sort of sexual dynamic of men and women. And I'd been socialized into believing it was a certain way and that I was going to be a nice guy. And, learning that and becoming aware of that dynamic about the truth of it has really changed my life. So I'm just saying, as smart as I think I am, I can also make stupid mistakes. And I want to extend that to every smart person out there who are perceived to be smart or have a PhD. Because, for instance, if we look at the history of central banks, and especially the most powerful central bank, the biggest institution of them all, the Federal Reserve, with their army of PhDs and smart people, they've still managed year on year since the 1910s, to buy gold at the top and sell it at the bottom. Which kind of puts a question mark, which makes you acknowledge that even smart people can do stupid things. So being smart in itself does not necessarily mean that somebody's ideology or their cosmology is accurate to reality. And with this in mind, I want to pass it back to you. I just wanted to say that, smart, yes. All powerful and all knowing, no.
Yeah, well, I mean,
Yeah.
we're probably we're operating in a space that's got so many different facets, and I think ultimately, you, for example, you're an absolute thought leader, a guru in the trading space. You've got a really good breadth of knowledge right across Bitcoin. You've been in the space for a long time. It's a real pleasure making content with you and talking with you whenever we hang out and have a beer. You've taught me a lot. I think we're some of the smartest people on the planet operating in the space we're in. And, for me, I'm sort of finding my niche ultimately. I think that'll happen over the next couple of years. And that's the way I see sort of content creation also happening in this space. We'll have experts in mining and experts in the development side. There's the economic side to this, the political side, the social side, the technical side. I could go on. It's fascinating. Yeah. Somebody that tells you they know everything about Bitcoin is the guy you don't want to be listening to. No,
nobody knows everything.
Yeah.
Cannot.
Yeah. So look, we're in a fortunate position. We do know a lot of the key people in the space. We'll certainly be getting them on the show with us. People watching this, we'd really appreciate if you do subscribe to the channel. And we do make this content for free. There's going to be some real key people on here in the coming weeks. So Vinzen, I think, for me, the debate is it's been a real ugly one. It's been warring factions. There's so many things at play here. If you just from a price point of view, if you look back at the coin split with ABC and SV, or Bitcoin Cash and Bitcoin SV, that's when the price dropped dramatically. Is there a correlation? I think it would be naive to think that these are the power brokers. These are the heavyweight players. And yes, this is Bitcoin is out there in the wild, but I think it's also naive to not acknowledge that there are all these different elements, and yes, it's an open source technology, but you've got big companies involved in the mining. You've got companies like Blockstream, like N-Chain involved here. There's people that have built on Bitcoin that many of whom who are looking closely at other solutions now because of the block size that Bitcoin's still sitting at. There's so many factors, and it's so much to take on and this initial discussion. So with that in mind, I think we need to map out a bit of a way forward here when we're bringing people into these chats. And I think it's important to get some people with who have decided, well, okay, I'm in that camp, and we can get them on here and let them run wild. for me, yeah.
What I also propose we do is I can unpack for people the case that Core is making, because during 2015, starting 2014, I started participating in the Bitcoin developers mailing list.
Yep.
Which is sort of an open source tradition. There's a mailing list and everyone posts to it, and issues get discussed and knocked out and hopefully resolved or shown not to resolve. For instance, Bitcoin has got no particular rule except for the one rule that is called Satoshi's Golden Rule, which Satoshi said there can only be a change made to the code, to the protocol of Bitcoin, if there is 95% agreement, which he called consensus. If there is consensus, which he said is 95% agreement, so sort of a unanimous agreement, that is considered consensus, and then the change can be made. If there is not unanimous agreement, if there's no consensus, then no change can be made. And Core stood on this ticket, on this golden rule, on the block size debate, because there was not 95% sort of agreement with the idea of increasing block size. There were, in fact, people like core developer Luke Dash Jr., who said Bitcoin's block size should be decreased for certain benefits. So without getting into that.
Well, I mean, briefly, that's all about a security issue, isn't it? And
it's about security and about scarcity, and in participating with that in that developers list, I watched the scaling debate grow. I participated and commented on it, and I asked certain questions. I was a journalist, a Bitcoin journalist at the time. I asked the obvious questions, so what is bad about increasing the block size? And I got answers. And I eventually summed that up in an article. But before I get into that, I just quickly want to point out to viewers or just acknowledge the fact. Can I do a screen share right here?
Go for it.
I'm going to share my screen. We just need to acknowledge the sort of the origin of Bitcoin. It's got a white paper that Satoshi Nakamoto published in 2008, and he had participation, or was it 2009? He had participation, people commenting on it. He quotes Adam Back in there, with Adam Back's hash cache is one of the references for Bitcoin's hashing algorithm.
Yeah, I mean, Adam Back cited 3 times in the white paper. I think this is the other thing. I think a lot of people sort of forget the fact that Satoshi solved the double spend problem. There's so much of what makes up Bitcoin other people have contributed to massively. Adam Back's proof of work. I forget, was it Sorensen, the guy that sort of came up with blockchains?
I mean, the whole idea of BitTorrent was the foundation for Bitcoin's peer-to-peer network. You have a server. There is no same server. It's a peer-to-peer network. So Satoshi was pulling together all these developments in computer science into one protocol.
Yeah.
But where was Satoshi coming from? Satoshi was a cypherpunk. He was an advocate of personal privacy in relation to who? In relation to the state.
No comment.
Satoshi was, until this point, until today, Satoshi, despite being very active on the internet, has not been tracked down. That's how seriously he took his cypherpunk OPSEC, his operational security, his privacy. So I just want to show a screen share because Satoshi has a cypherpunk, Adam Back has a cypherpunk.
Yeah.
Viewers should just be aware that there is a manifesto that was published in the 90s called the Cypherpunks Manifesto by Eric Hughes, and it outlines this movement's sort of concerns. And the primary concern is that the modern state is not becoming more friendly and more considerate of people's rights and privacy, but invading it and doing so in a way that is aggressive and progressively more monstrous. And the cypherpunk said, we will use cryptography to enforce our privacy on the internet, and we will make a money that will enforce this privacy away from government and its tendency to devalue its fiat currency. So here is the manifesto. It's not very long. It fits on one screen on my browser. I'm not going to read the whole thing. Anybody can go read this. You just type Cypherpunk Manifesto.
Yeah, but it's on my website as well. People can also find it there.
Great. So from here, we get this kind of statement where Satoshi, here in the top left, Bitcoin is not a currency for a government. It's a global currency for the people. This was a design consideration.
Camp, screen up there, Vinze.
Yeah, top left is a quote by Satoshi Nakamoto. Bitcoin is not a currency for a government. It's a global currency for the people. That is a public statement he made. So moving on from there, cypherpunk Adam Back, who's the founding member of Blockstream and quoted in the Bitcoin white paper, he tweeted out the article that I ended up writing about the block size debate. And he says in this tweet that I nail it. He said, if you read nothing else, read this. He sent this out in August of 2015. And my article was entitled Bitcoin's Block Size. Bitcoin does not scale effectively. And without sort of reading my whole article for people, I've got it up here so that we could just...
we can, do you want to put a, we'll put a link below this video for people to have a read of it?
For sure, if they want to look. And I've released
when
this...
did you write this?
I wrote this in August of 2015, just as XP was being released, because from the Bitcoin developers, learned enough.
I think XP was going to be like 20 megabytes, is that right? I think.
Yeah, on 20 megabytes, on its way to 1 gigabyte sort of thing, you know. And I then took the opportunity, not because of XT, it just happened to happen at the same time as these things do. I made the case for case for not increasing block size, and it's informed from Bitcoin's design document, right? So just to summarize for people and give me 2 minutes, you okay? I'd take 2 minutes here just to run through this article. So we find that Bitcoin's design purpose is that it should be decentralized and trustless, of course, to enforce privacy. And not be censorable by government or any other person. It should be decentralized and trustless. And for Bitcoin to be decentralized and trustless, we need for there to be a consensus mechanism. So no one party can sort of enforce or demand their version of the truth. There should be a decentralized truth, and this is Bitcoin's consensus algorithm. So what we find is that this design makes Bitcoin censorship resistant. Nobody can come in and say, I'm going to change Bitcoin now. You know, I'm going to hack it, or I'm going to put up so many miners, or I'm going to put up so many nodes. The consensus algorithm prevents that. And because of this crucial function of being censorship resistant, we find 3 side effects or 3 caveats. You know, what it does is it makes Bitcoin's blockchain expensive, because to mine the blocks is expensive in terms of electricity. And that is an expense of this blockchain, right? It's expensive to mine. It also means that Bitcoin is unreliable because it takes a while for the consensus to be reached on the network. You can't say that Bitcoin should have like a 1 second confirmation time. Sometimes your transaction might take 10 minutes to confirm. Sometimes it might take an hour to confirm. Sometimes it might not confirm at all because there was a chain split. You know, for this consensus to work, sometimes orphan chains develop or side chains develop, and there's splits in the network. And when they reunite by consensus, your transaction is lost. You know, and this is unavoidable if you want a censorship-resistant, decentralized blockchain. Also, of course, the fact that if the network gets busy, there's no guarantee that your transaction is going to be mined. That's another unreliable factor. And then thirdly, it means that Bitcoin is slow. Bitcoin's blockchain is slow because the transactions must propagate through the network for validation. A block takes about 10 minutes, and that's what the difficulty algorithm is all about. And then once they're included in a block, then the block must propagate through the network. So it's just slow, and it's unreliable, and it's expensive. Of course, another expense comes in that because you're making a blockchain, you're adding one block after the other for eternity. It's expensive in resource costs. It's expensive because you've got to pass all these blocks around the network, around the internet. It consumes a lot of disk space. It consumes a lot of bandwidth. The validation is heavy on a CPU. So there is a fine balance when we consider Bitcoin in a functioning state, the protocol in a functioning state, and the network is able to pass all these blocks around and do all of this consensus work and validate all these transactions, to the point where if you say, well, if we've got these really, really big blocks for some other benefit, and merits of those benefits can be discussed, but if we've got these really big blocks, we're then making the bandwidth throughput greater, the bandwidth needs are greater, and the storage capacity needed for every node of Bitcoin becomes greater. So the immediate argument there is, well, if it becomes so expensive that some people have to shut off their nodes, then it becomes a wealthy man's game, right? Or only certain people can afford to run these nodes, and it's essential to run your own node because you want to validate your transactions, because you want that sovereignty. So this is the kind of the trade-offs that we have in Bitcoin. You want this trustless censorship, decentralized thing, and then there's a cost to pay. You know, it's going to be slow, it's going to be unreliable, and it's going to be expensive. And then the rest of the article sort of explains what I just put for you in a nutshell. Mm-hmm. And you know, the cost of mining, the increased cost of mining, the increased cost of storage, all of these things, your custodianship, and I get into the layer 2 proposal that Core was making at that time.
Yeah.
You know, with Lightning and SegWit being the vital components. Okay, so have you got me up to there? Did that make sense?
Yeah, sort of I'm going to ask. I think for the further fly events, and obviously I'll ask Craig Wright to come on the show and talk to you.
Yeah. So I just unpacked some computer science truths, you know, in terms of Bitcoin's design, and then the computer science effects of that design, what it means for network throughput, what it means for required CPU capacity, storage, so on and so on. The consensus mechanism being the basis of this decentralization and censorship resistance.
Yeah.
Consensus takes time, right? So you want consensus. So if you want Bitcoin to be faster, you must sacrifice some of that consensus. But then you ask yourself, what is that worth in terms of security and peace of mind?
Yeah.
So in terms of that summary, I want to go ahead because I want to go to my.
Sorry. No, I'm jumping on the top of you there. I know you were wrapping up. Finish off, please.
And I'm finished with this part of what I was going to say, which is a summary of the design and implications. Implications.
Okay. Interesting.
The next aspect, and I asked the core developers, so what is the scientific? These are the design considerations of Bitcoin, right? So what do we have scientifically in terms of research that discourages us, or should encourage or disencourage us to increase block size? And Peter Weiler, many people call him Peter Woolley. Weiler.
Yeah, he's put some interesting stuff out in the last couple of weeks, actually.
He's the architect of. He's one of the architects of SegWit. He's one of the, most prolific and respected core developers.
Yeah.
Peter said to me, have a look into the phenomenon of induced demand. And I found it straight away. It's on the Wikipedia. And what induced demand is, it's considered a phenomenon, or some people call it a law. I wouldn't go that far, but it is a phenomenon in large-scale public networks, for instance, road networks, public roads, or large-scale medical networks, like national medicine networks. This phenomenon of induced demand the research illustrates that when you increase capacity of a large network, you inadvertently ramp up the consumption of that resource. So in a nutshell, that sounded very magnanimous. Just to put it in short terms, if you increase road space, very soon that road space gets utilized by more traffic, and you're back to the congestion that you were trying to solve by increasing the road space. What do you think about that? Did you know that was a fact?
No. Interesting.
Right. And this counts in medical. This is found in when people try and increase capacity in medical, national medicine networks as well. For instance, if we just stick to the issue of I'm just going to read the Wikipedia for what it's worth. Induced demand related to latent demand and generated demand is the phenomenon that after supply increases, more of a good is consumed. This is entirely consistent with the economic theory of supply and demand. However, this idea has become important in the debate over the expansion of transport systems, etc., etc. There's some articles, people can find them easily, outlining in simple terms as some case studies of induced demand, specifically to do with roads. And what you find is that if you have congestion in a particular part of a network, what's that nice word? Your sort of intuitive or natural response would be, well, there's a lot of congestion here. Let's increase the number of lanes, right? So that there's less congestion, the traffic can flow. But then what you find is once you've done that, traffic from elsewhere in the network will say, hey, there's really like a low congestion area over there. I'm going to reroute and use that. And because a new pattern of consumption develops, because of that available supply, and a bigger congestion results. And so you find that the Bitcoin developers are saying this phenomenon of induced demand, as consistent as we find it in the real world, is very likely to be the next logical step for Bitcoin. That if you increase the block size as a means of scaling it, of reducing the periodic congestion of the blockchain, because right now the network is not congested, right? The transaction fees are low. It's been like that for months and years. Probably not years, but for well over a year. So if we do face during the next rally, or when there is a rally for a few days and find that suddenly there's congestion, the fees ramp up and people start saying, ooh, you see Bitcoin's in trouble. Just like you see with a congested road at peak traffic times. You say, well, let's increase the road space, let's increase the block size, and that should solve it. However, what the law of induced demand tells us is if you increase that block space, pretty soon that block space is going to be used. It's going to be, all of it will be consumed, and you will just have bigger congestion during the next rally. So the Bitcoin core developers are saying, instead of increasing the width of the roadway, increasing the block size, let's create layers on top, so that instead of let's create a monorail, and let's create more public transport. Let's create buses, bus routes on this thing. So instead of 20 cars with individual people in it, you have those 20 people preferring the cheaper bus ride. You've increased the traffic by 20 cars or more for every bus on the road, and the monorail will connect important nodes, and it's still using the same territory. The monorail is running directly above your freeway, but it's not adding to the congestion. In fact, it's relieving some of it. And this is the argument for layer 2, that it's this kind of thinking. It's like, let's think outside the box. Let's instead of saying let's horizontally expand this, let's scale it vertically.
Yeah.
And intuitively it makes sense to me. And I think when Lightning Network goes live and more people use it and it actually becomes production quality, I think we're going to see that there will be a rally in Bitcoin with very little congestion in the sort of current 4 megabit blocks of Bitcoin core.
Interesting. Okay. Well, you know, as I sort of started off by saying, I think it's important to educate people on all the developments across these different these different bitcoins, these different groups of devs. These are fascinating times over the next year. I can clearly see where you sit in this space, and that's fantastic. For me, I really am sort of venturing out now and looking at what the offering is from the different groups. I mean, what are your thoughts around that, Benzan? I mean, do you really have an issue with the fact that there has been these coin splits and these one group is off doing their thing? Is there a problem with that? I mean,
no, I don't think so. I mean, it's a pity from my perspective. It's a pity that there are cargo cults that develop around these personalities. It's a pity, but it's inevitable. It's not good or bad. It would be much nicer if we just had consensus and level-headed, rational thinking.
I mean, in a perfect world, perfect world, Benzan, all that talent would still be in one place. I mean, ultimately, it was at one point. But it's also, I think we've also just to quickly finish that point. I think we've got to remember that a lot of this stemmed from the fact that there was businesses in around sort of 2016. A lot of them were starting to fall over, and the argument was that the Bitcoin's battle would be lost to the multitude of altcoins that sprung up. And we have thousands of these things. So you had businesses like Coinbase, Circle, etc. That all of a sudden these were Bitcoin businesses. All of a sudden, bringing in all these weird and wonderful other coins that we both know most of them were complete rubbish. But the fear was that Bitcoin would get trampled on. So I think I do think these other Bitcoin projects have to be assessed on their merits, and that's kind of why I am so interested in understanding what.
I'm with you.
I don't consider them altcoins. Really,
I was very active in Reddit, which as opposed to the developers' mailing list. I was also
fuck Reddit. I posted there 3-4 times and got banned every goddamn time. I didn't even bother clicking on the links to. I think obviously they saw hard forking and assumed I was a Bitcoin Cash guy, and literally I just got banned immediately. So, that was a pretty bad experience for me, to be honest. I've never really gone back there.
Yeah. It's got some. There was some emotion and contention at the time, and it sounds like you were a casualty of that.
I was.
I was being active in Reddit, in our Bitcoin it was called, and discussing these things, making my points, citing my articles, citing Satoshi, citing the developers, sort of really making the case for SegWit and Lightning Network, and putting my weight behind that side of the scaling debate.
You've got a level head, Benzan, you've got a level head, but unfortunately in this space, so many people don't.
Exactly, and there was a lot of vitriol. There was a lot of contention. There were people coming to our Bitcoin from Roger Vere's RBTC, sort of trolling and spamming and being very vicious. And when I actually then went to RBTC and went and looked at the conversations there and participated in them, I was just like, man, this is a nasty place, man. There's a lot of emotion. There's a lot
that's why I don't really go back there. Same with Twitter.
And this sort of typified the whole debate for me, that there were these two camps. The one was very vicious and trying to tear down core. The other one was like, what are we going to do? These people don't listen to reason and logic, or they're not willing to discuss both sides. And then as soon as the Bitcoin Cash split happened, all of those people were polarized. The polarization meant that those bunch of guys went to their side of the island.
Yep.
They relocated, and they were busy there. And now they had sort of their own talking points, and they started splitting up into smaller camps inside of their, group. But what happened is that they left the Bitcoin forums alone, and they left the Bitcoin core developers around, and then suddenly there was consensus for SegWit, and SegWit was implemented in 2017, and that was progress, because of these splits. So I think the splits are inevitable.
Yep.
Because of sort of little groups developing, and they are good for us because it means that whole group moves to the new split, and they become active there. They take their emotion and their thinking there.
Totally.
And this group, they can progress. And then ultimately, what it means is that the split will become, from my perspective, the split will become an experiment, a public experiment of what the split is proposing is the best way forward. So, for instance, Bitcoin Cash said this is what our large blocks and our developer team, and the fact that we haven't got these crazy core guys in there, now it's really going to progress. And where is Bitcoin Cash at? Nowhere. We don't know what's going to happen in the future, but I think these splits are useful for that purpose as experiments and proofs of concept, for us to say, you see, I told you so. From my perspective, that's where I stand,
I couldn't agree more. I mean, it's good to hear you say that because, okay, you're mentioning cargo codes and so forth, but there's cultish people within all these communities. And I think everyone needs to basically get on with their own projects now. So obviously, very interestingly, at the top of the show, you mentioned that you don't think we're in a bull market. Obviously, people are going to want to know a bit more about that. So I think that's where we'll start our next show.
Great. Yeah, we don't have any technical reason to believe that we're in an ongoing bull market. My personal feeling is that yes, price is going up, but that we're in a bull trap, and that the bear market will last several more years. And I'm not saying people should trade that, but certainly when there are technical indications of we are going up or that we are in a bull market, we'll be saying them here, right? And we'll be citing exactly what technical reason that is.
Okay. On that note, that's that's certainly clickbait to get people back to our next show. I think I don't think there's too many people saying what you're saying there, Venzen. So please join us again. I think probably thinking about it, Venzen, it might have to be Thursday or Wednesday evening for me. Definitely Wednesday or Thursday. We'll be back with more for you. We really appreciate it if you do subscribe to the content. Check back here. It's I think we're getting into some good stuff there in Zen. I'm enjoying it, and we'll start introducing some guests into the content with us next week. I think it's going to be a lot easier when you and I are sitting together to have somebody else coming in online rather than hundreds of screens and flip flopping. I think two's good when you're having these online chats, maybe three, but no, I'm enjoying it just with the two of us for now. It's great.
Great. So am I. I'm enjoying it a lot, and it'll be interesting to see. It'll be interesting.
Oh, what happened there? Okay, we've lost Renzen. I think we might have to wrap it up there anyway, people. I hope you've enjoyed this chat. It's a real pleasure to be creating content with Venzen. He certainly has a history in this space. And obviously, there you are. Okay. Anyway, we'll wrap it up here. Until next
goodbye,
time.
everybody.
Oh, hang on. You're back. I'll let you say your goodbyes there.
Yeah, so much for GoPro and live casting.
Excellent, my friend. We'll see you soon. And as I say, people really do appreciate it if you drop us a comment. And more importantly, subscribe to the channel. We really appreciate that. Until next time, thanks very much.